Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, February 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 1.5 at 482.5. March soybeans are down 8 3/4 at 1034 3/4. And March Chicago wheat was down 4 at 573. This morning we had a couple of export sales announcements, 130,320 metric tons of corn to unknown destinations for 24-25, and also announced 120,000 soybeans also to unknown destinations for 24-25 as well. We are through 7 of 19 settlements for our spring crop insurance discovery period. Corn is currently 468.5, while soybeans are at 1062.25. Good morning, guys. Hope everybody's doing well. We got some winter weather going to roll through the upper Midwest here later today. So I guess that means we'll get maybe a couple inches here in Chicago because everybody's freaking out. But outside of that, kind of a nothing burger report yesterday. But really the big news, I would say, in the outsides this morning with consumer price index inching a little higher than estimated, up 0.5%, putting us at 3%. Up 3% over the last 12 months. Stocks currently down 418 in the Dow. S&Ps are down 66. So with that, Dustin, maybe a few thoughts to kick us off here this morning, and we'll throw around the room.
Yeah, thanks, Dan. Yeah, we've got energies down a little bit. Currencies are higher. Stocks are lower. Grains, we're trying to inch higher overnight, but kind of brought down with everything else as well. I think the big thing that we noticed yesterday is the front end of the market is starting to see a lot more weakness, especially for things like, March corn. And that really coincides with what you'd expect too. Like a lot of, people know they've kind of needed this rally. Anything that's been in the bin is probably getting moved and sold right now going into loan renewal season. And, this is what we saw last year in late Feb is that the March contract collapsed against the back month contracts just as it started to move. Now, it is still quite inverted to new crop contracts, but we are pricing in decent carry-in from March to May. So that's, I think, just a sign that there's a lot of willing grain flow right now. And that should be noted, I think, that the back end is still holding some support against it.
Yeah, Ben, what's on your mind this morning?
Yeah, just report was really nothing for grains. Full scale, I don't think that we're going to see managed money fully exit their longs. They may lighten it up a little bit. When they get long this early in the year, they tend to stay with it until they feel some confirmation that we're off to at least a decent start with our new crop. But you always worry about outside markets, macro influences, things like that. Same thing goes for, the opposite of a rising tide lifts all boats, right? It can work in the other direction as well. Ultimately, I think corn is going to find buyers on breaks for the next couple of months. Everyone likes to mention the John Deere low of March 1st, which happens to also be right around first notice date for March contracts. Maybe a little weakness into that, and we'll see where we come out on the other side.
Yeah, very good. We're going to be a couple of days here. We're going to be halfway through crop insurance discovery. I know we've been doing massive amounts of analysis and deep dives into, policies. And I guess a lot of what we're seeing is that, perhaps the status quo this year needs to be ruffled a little bit with some of these different products and different options that are available. Justin, maybe a few thoughts on what you're seeing in the market. I know it's not a whole lot of fresh news here, but as we wrap up crop insurance, we're going to be making some pretty interesting decisions ahead of March 31st.
Yeah, I think this, like you said, this rally was certainly welcomed. It's still a pretty tough environment out there, even after this rally. But at least it puts us in a position where there's some there's some hope. There's some things you can do to really mitigate the huge, $200 acre risk type numbers we were looking at, call it last winter, fall. Yeah, I personally wouldn't be surprised to see us set back a little bit here with kind of South America, catching up on planting for this Safrinha crop. They really caught up in a short amount of time. So it's not surprising to me that we're kind of setting back here. We've obviously put a ton of open interest on, a ton of new longs in the market. To sort of kind of break back down to some of the big moving averages is kind of my goal. To see if it can kind of liquidate maybe into, to Ben's point, either March 1st or even options expiration next Friday or a week from this Friday. So that wouldn't surprise me, we're pretty far away from some of the bigger moving averages, kind of March corn in that 465 to 450 area. There's a lot of stuff. That wouldn't surprise me too much. I think they've got a good position on from a low price, and we're going into the growing season. We have to, corn carrot's going to be tight. You can argue if, exports maybe even go up another couple 100 million or 150 million in corn. So definitely puts a ton of onus on the Safrinha crop, as we've been talking about for a long time here. And then our acreage report at the end of March. So I think the market's going to want to kind of get through that. It's going to want to keep a premium to corn. It's going to want to keep that ratio relatively low, in my opinion, to make sure we get the acres. So a week to 10 days, we've set, a lot of that pricing window. So it gets really interesting with crop insurance then, because if you have massive moves after that price is set, there's a lot of things to do around that. So you could see where we've had years where the market really breaks after prices are set into mid-March, and people really ramp up their crop insurance products because the price is obviously set at a higher price than we're at. So you could also see where we have a big flat price rally that it changes some people's opinions. So this is always kind of the beginning of the fun season, right? For markets and trying to, price discovery. So I think I still think it's going to be exciting, good markets between now and the summer.
Yeah, and certainly a welcome snow event. I know in at least Northwest Illinois, it's been pretty bone dry. We haven't seen anything on the ground, so we get this 8 to 12 or whatever it's supposed to be. I mean, I think that'll be pretty good for everybody as well. Still early.
I think Chicago's like 10 inches behind on the year or something like that. So of course we're going to try to catch up in 1 storm, but it is what it is.
Yeah, no doubt.
Yeah.
No, very good. Rylan, got a couple minutes here before we come into the open. Slaughter keeps getting revised lower for the week, and certainly this weather, I think, has some people talking. And then you look out to Feb and April hogs, grinding back to their contract highs. So what are your thoughts here this morning?
Yeah, the weather may be playing a role into that overall, but we are starting to see, it was kind of a bad close yesterday. More liquidation. We took 5,000 contracts out of commitment here on open interest. We got April below the 40-day moving average. So it looks like Packers are going to try to save some money here. We've seen a little bit of cash trade at 203, so it would have been about $3 lower from last week. And beef prices were also lower. You had Choice down at $104, Select down 171. So, and the market's trying to find out where we're actually going to find some support. And that does tend to happen in these kind of scenarios. You trade down to that fear level, and then around the corners, another big rally. So, we know the trade's heavily long, but it looks like they're starting to liquidate. There was a little bit more headline trade yesterday just because another dairy worker, or at least the first dairy worker in Nevada, tested positive for bird flu. So CDC is still saying that the threat is low, but we know this is a problem starting to show up on the CPI report as far as the egg index jumping 15.2%. So like those prices are definitely becoming problematic. So, no, it seemed like there's a lot of headlines going on right now, and that's something to keep an eye on. But right now, the storm maybe, that's set for the Midwest, maybe kind of helping keep some of the prices under pressure here. So we'll see. We're waiting for the northern trade to really pick up, see how that shapes up. Maybe that can help find a little support as well. So that's really what the focus is, I think, going into the end of the end of the week. On the hog side of things, you had the new high close. It was the highest close for the April contract life. So, from here, technical momentum could really start to take off to a large degree, especially if the meats and the primals really start to follow. Cash has been up pretty big. At 88.55 yesterday, so these are big numbers. I mean, and the board is obviously trying to front run it a little bit. So we're expecting the C cutout continue to strengthen here, especially with bellies staying pretty strong. So I think all in all, still good things to watch here. But yeah, I mean, I think we could be in a little bit of a weather market. So I think you could stay pretty volatile for the time being in both places.
Very good. Appreciate the update there. One thing to note, we will have weekly export sales out tomorrow morning, 7:30 Central. We'll take a look at those and certainly visit about that in the war room. Also, Jack's got more information in the outro, but as I've mentioned on a daily basis, we are running a special offer here through April 1st for new AgYield clients. Give us a call. We're doing a lot of deep diving into crop insurance, marketing, how all those pieces come together. So if you want a second set of eyes or another opinion, give us a call. We'd love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. Again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.